So obviously now we've looked at the income, we've looked at your credit. We also have to look at your down payment. Where's the down payment coming from? Now, there are down payment assistance programs. That's for another video. They are available. We do have different types of programs. By the way, they're not perfect programs, but they're good. But you do pay a higher interest rate if you take that. Sometimes you have to pay it back in a certain period of time or live in a home for a certain period. So there's different stipulations on that. But let's just assume you're putting a down payment. Now, you are allowed to get a gift for a down payment. So grandma can help you. Mom can help you, cousin Charlie can help you, your best friend in certain circumstance, we have to document the relationship, can also help you. And we can use a gift. It's not allowed to be a loan. You are not allowed to borrow money for the down payment. You can obviously use your savings. You can use your 401k. There's a lot of options and a lot of ways to come up with the money. I once did an incredible job with for this family. I was so excited. It's still one of the proudest things I ever did. Is I had this family. They were 8 brothers and sisters. They all wanted to buy a house. And what they did was, one of them had saved about $4,000, and the other 7 gifted $1,000 each. See, it doesn't have to be one person who's going to gift you $10,000 or $20,000. They each gifted $1,000 each. And the next month, the next brother, basically, he had some money saved, and everybody gifted him $1,000 each. And they were all young, and what they did was they lived together to save the money so that they can help each other. And in 18 months, all 8 of them bought houses. That was one of the coolest things I ever did. And the reason I'm telling you this is I want you to think outside the box. Maybe there are other ways. Maybe even your boss. A boss is allowed to give you a gift for a home loan. So you can do a lot of different things. Now, the down payment required, if you're a veteran, 0 down. Thank you for your service. You deserve that right. If you're looking for an FHA loan, it is $580 and above, 3.5% down, $579 and below, it is 10% down. Now, if you're looking at a conventional loan for a first-time home buyer, you may be able to get a program that allows you to put a 3% down payment, and if you're a slightly lower income, we might even be able to get you a lower PMI rate with what's called a Home Possible loan. So Fannie Mae and Freddie Mac, they have Home Possible and Home Ready. They're great programs that help you save a little bit of money. So I think that's a pretty good deal too. Otherwise, you're looking at 5% down, 10% down. The more you put down, the better the interest rate you're able to get. The higher the credit score, the better the interest rate you're able to get. So all these things come together as far as what we can do. Now, if you're looking at buying a home for an investment, this is a totally different situation. It's pretty much going to be a 20% down, and you're going to be limited to a conventional loan. But for now, I'm going to assume you want to fire your landlord, you want to move into your own house. This is what you want to do. You want to buy a home. People say to me all the time, hey Chris, how does that work, those minimum down payments? Well, they do require PMI. Mortgage insurance, it's called. Private mortgage insurance for conventional, or mortgage insurance premium for an FHA loan. If you're a veteran, you do not pay PMI. Now, you do pay a funding fee that they add to the loan amount. It's a little bit different. Disabled vets don't even have to pay that, which is great. So let's see PMI. On an FHA loan, look, it's going to cost you X amount of dollars depending on your loan amount for PMI. Now, on a conventional loan, if you have a super high FICO score, the PMI rate's cheaper. And if you have a lower FICO score, the PMI rate is more expensive. So when I look at a person and I evaluate their finances and I'm doing a pre-approval, I look at the FICO scores. Because the FICO is going to tell me, hey Chris, where can you save them the most money? A high FICO score, it's usually a conventional loan. A low FICO score, it's almost always going to be an FHA loan is the way I'm going to recommend it, based on the loan amount. Now, every single county has different loan amounts as far as limits, what they do allow you. So we can take a look at that as a whole. We'll figure out what we need to do as far as the purchase price you're looking for. See, here in California, a $500,000 home is not really a crazy expensive home. And I know in many parts of the country, a $500,000 home and you're buying a semi-mansion. So there are different limits based on the average area income and the average area home price. So that's for another video, but here's what we're going to do. We're going to take all your credit. We're going to evaluate the whole situation with your credit. We're going to evaluate your down payment availability, how much you can put down. We're going to evaluate your income, and we're going to say, this is the right program for you. Now, I've been doing this so long, I'm a dinosaur in this business. I know just by looking at a few things which loan is the right loan for you and your individual circumstances, and most experienced loan officers will be able to do that. So that's a big deal. We take all your information. We're going to look at your pay stubs for income. We're going to look at W-2s for income. We're going to look at perhaps your income taxes. Sometimes people have to provide their income taxes. Maybe they're self-employed or maybe they're commissioned. There's different reasons why we would need to see income taxes. And we're going to enter your income into a computer. We're going to run your credit. Again, it goes into the same software. We're going to look at where is the money coming from. Is the money coming from a gift? Is it coming from your bank account? We're going to enter those things into a computer. We're also going to evaluate some things that we need to do to avoid discrimination and protect borrowers and future borrowers from discrimination. So we're going to ask a whole bunch of questions. We're going to enter it in. And we're going to run it right through Fannie Mae or Freddie Mac's website. And it's going to give us what we call a DU approval or an LP approval, and depending on which one we run. And once we have that approval, we know how much money you're approved for to borrow. And then, and only then, can you really go out with a realtor and with confidence saying, hey, I have a pre-approval letter, I have a DU, that's called desktop underwriter or a loan prospector approval, so that we could submit this with an offer if we decide we find a house we want to do that with. So those are the things that are required for a pre-approval. They are a big deal, and they're complete, and they're important that they're all taken care of.